Hello everybody, welcome to this week's edition of Northwest Quadrant Wealth Management E-News. Thank you for joining us in the summer doldrums. So today we thought we'd talk about the market rotation we're starting to see and decide if we think it's going to be here for good or maybe it's a shorter term phenomenon. Obviously in the last couple of weeks we've gotten some better than expected data on inflation. Inflation continues to move in the right direction, but we feel like the data on the inflation print is going to continue to be lumpy. It's going to be very difficult for the Fed to get that final mile where they want to hit their target of 2% inflation. But it's certainly been better than expected over the last week or so. And that has meant the parts of the market that are going to do well in a lower interest rate environment have rallied. And not only rallied, they've ripped. So the market is now expecting the Fed to be cutting interest rates in September. And that means small cap stocks, REITs, all the parts of the market that have been underperforming, had an unbelievable week last week and so far today have been ripping as well. I don't know that we're in the camp actually that the Fed is going to be cutting interest rates in September. I think the Fed is going to keep sort of rates higher for longer just to make sure that inflation is in fact at that 2% target and is going to stay there. And so, but that doesn't mean that they're not going to cut rates eventually. We think it's probably more likely in 2025 that they do start cutting interest rates. And so that part of the market that is rallying right now, we feel like it is going to rally, but we don't know if the current rally we're seeing in small caps and the other interest rate sensitive parts of the market is sort of sustainable. We certainly are enjoying it. And of course we can always be wrong and the Fed could cut rates and that part of the market will continue to do really well. And so again, it all goes back to what inflation is doing and what that means for interest rates, and that's the part of the market that's going to do well. The other thing that was really encouraging last week is we got a lot of the big Mag 7 names. So think of the names that have been leading the market, the Amazons, the Googles, the Teslas, the Nvidias. Those stocks, some of those stocks had huge downside last week. We had some of those stocks down 5-6% in a trading day, and the overall market held up while that was happening. So money was moving out of those big names into different parts of the market, and so the overall market held up, which was quite encouraging for us to see that the market wasn't just dependent on these 7 names to trade higher. Now the important thing is, and the ultimate driver of stock prices and earnings is earnings, and that's just started, and Josh can sort of fill us in on earnings and what that's going to look like.
Some of our viewers will remember that so far this year, the last couple quarters, we've talked about stock prices have increased, but that's been on the back of earnings. So valuations really haven't gone up all that much, meaning people aren't paying more for the same dollar. The earnings growth is actually what's driving stock prices higher. Earnings growth in the small cap space has been really good, and small caps have been trading at really historic multi-decade discounts to large caps. And so you're finally starting to see this catch up, but it's very supported by earnings growth. And these small caps are now just mean reverting. Earnings season just kicked off on Friday with the big banks reporting. So we've still, we've only got 30 or so companies having reported so far. So we're just in the beginning of earnings season. But the really good news ultimately is that valuations aren't going up. And especially in the small cap space, they're just playing catch up. So this rally is actually supported by earnings growth. We'll see if the rest of guidance comes in as expected, but so far in this quarter, earnings growth has been really good.
So we're quite optimistic about where we have our portfolios for you, our clients, where we have those portfolios positioned on a go-forward basis. So as always, if you have questions about your situation or your account, you can give us a call at the office, 800-743-0988, or email either one of us, Josh or Tyler, at northwestquadrantwealth.com. We'll see you back here in 2 weeks.